catching up now with the director of St. George Eco Mining, that is Frank Dumas. Now, St. George Eco Mining is quite a complex entity. It has a number of projects, a number of subsidiaries, but altogether we're talking about critical minerals, exploring, processing, and refining. So let's start, please, Frank, with an introduction to St. George Eco Mining. Tell us a little bit about your project portfolio that you are exploring in Quebec.
St. George has three active projects in Quebec. So one of them is the Notre Dame project. That is a niobium, gallium, and rare earth project. There's also a good amount of credits of iron ore and titanium and vanadium and scandium in that project. This is something that's kind of a long-term operation. We're planning to go back at it in 2026 with fresh new drilling permits and to expand the zone. So far, we've identified a certain amount of potential lands that might carry the same amount of high-grade niobium that we found in the first lands last year. The other projects are the Julie project, which is a long-term project. It's very complicated or complex projects. That is a treasure trove of different type of mineralization. We've done drilling in the last few years there. We've done downhole geophysics also. That now allows us, after the analysis, to go back and probably drill the feeder or what we expect to be the feeder of what we're discovering at surface. Finally, the crown jewel is the Manic project, which is in Quebec again on the North Shore. And this is a project that we've put about 10,000 meters of drilling so far in it. We've identified high-grade corridor, two pay zones that are confirmed over a few kilometers that are fairly thick and in the first 100 meters of depth. We want to go back at it, expand this thing with new discovery recently of new zones that are kilometers away. So the next stage for this one is permitting and going back at it in the summer of 2026.
So Frank, in addition to the project portfolio in Quebec under St. George Mining proper, you do have a subsidiary, Iceland Resources, and under that there are various projects and activities. Could you give us an overview, please?
So Iceland Resources is a subsidiary that we own 100%. That has a license to explore for mineral in Iceland. Now, we have two more advanced projects. That's the Elbow Creek project, where we have an agreement for up to production. And as historically, we found some very high-grade gold results there. And we want to go and explore more this project this year. The other project is the THOR project. Short is THOR, THOR. And this one has a fair amount of drilling done. We want to go back again and put a good amount of drilling this year in 2026 and probably move it to a resource estimate. There was mining at that site in the past before the Second World War by a German company. They were kicked out of the country, and then the project ended up in limbo for a few years. It's a project that you can reach easily. There's infrastructure on it. There's even power lines that pass by. And that's about 20 minutes in car from the capital, Reykjavik. In Iceland, what's interesting is that we also have metallurgical initiatives with geothermal energy producers that allowed us to take their effluents or their residue that comes up, the mud that clogs their wells and the mud that they have to discard also when they produce the hot water and the steam. And the goal is to go at it and process that material that turn out to be a concentrate of base metal and precious metals. And we're in reception now of a good amount of that material. And we have one of the energy producer that's moving now in the serious phase of production with multi-tons expected in the first part of 2026 that we will process and probably produce a good amount of ounces of gold and silver. The last thing there, and it's something we inherit when we acquire Iceland Resource, is the ownership of 15%. So it's a passive ownership of a hydroelectric dam that now is moving forward at a faster pace, and that we expect to have some big news at the end of March or early April, and even most probably there's the potential of a early monetization opportunity at that time on this one. And that monetization could be a significant amount of money, probably a big amount or a big portion of our current market cap right from the get-go. So that's interesting for us. That's why you want to keep a watch on Iceland Resource.
Oh, I'm sure a lot of people have had their interest piqued just now. But if we can keep moving forward to St. George Metallurgical Co., also known as SX Metallurgy, you have achieved your first revenues there.
So we got revenue. It's not revenue that we think is going to be recurring, but we might make a little bit more. And that's when we sold some of the legacy material we had from our R&D initiatives. Now, in that subsidiaries, we have 3 or 4 grant proposal right now that are moving along with different partners, some with major companies. And we have a pilot plant that's running, that's testing 5 tons of material right now that came from Canadian source. This is a project where we got, our initiative where we got a $3.7 million Canadian of contribution from the Canadian government. The Canadian government's putting a lot of restriction on it in terms of who we're allowed to work with. They consider it as a strategic technology. This is a technology that if we can meet what we or reproduce what we saw in the lab, should have a capex and an opex that's going to be a fraction of the lowest opex and capex Chinese producer for lithium and spodumene. So this is something that would probably allow Australian spodumene producer to suddenly become very competitive versus the Chinese operator and decouple North America from the Chinese stronghold we have right now. And that's very important for the government. And we had, for example, a major company, major producers that produce material in Canada and elsewhere in the world that was willing to give us all the tonnage that we required for this initiative. And we had to say, thanks, we can't, because they were not vet by the Canadian government. The amount of foreign ownership in it from certain countries were too high to the liking of the Canadian government. So they scrambled and they found us. They find us other suppliers, which is interesting because one of them is a major that has a good, I'd say, a good link with Australia.
So lots to look out for there as well. Now, for these next 2 subsidiaries, we will do future videos going more in depth. But could you give us a bit of an overview as to the operations of your renewable energy branch, that is H2SX?
Well, H2SX has been operating with its partner in Korea, a pilot plant since late last year. That's a pilot plant where we can send potential partner and investor to touch and see the technology in action. It's run by an expert in hydrogen, and we own 80%, give or take, of that subsidiary, 10% owned by the Korean partner, 10% by the scientists in Canada. And the goal now, we had different offer from green funds to come in and take majority ownership. We want to monetize this subsidiary. It's a subsidiary that for us, the strategic reason to have it is to be able to have access to hydrogen to produce nitric acid. So without getting too much in details, that secured other initiative we have. And it's very interesting because it takes natural gas, it takes gas from landfill, for example, biogas, syngas, and convert it into 2 things. Solid carbon, so graphene to carbon black, and also pure hydrogen. It's not something that is even threatened by other alternative hydrogen production. The capex and opex is so low on it. The competition is SMR, steam reform, so the dirty way to make hydrogen. That's the majority of the production in the world right now. That's our competition. And we think that we can be equal or below their cost and in terms of OPEX. And we know that there's no comparable in terms of CapEx because it's a module operation. It can be ramp up. You just add modules. So you can start the production with commercial production with as low as $15 million. While if you look at the current or recent CapEx of SMR projects, they're in the $1 billion range. So it's interesting because we can go directly to the end user bypass the cost or the capex of transportation, pipelines, and infrastructure that does not exist in hydrogen, and is probably the biggest issue of that business or that market, and go to the people that need the hydrogen, the steel mill, the big industrial client, and build modules in their parking lot so that we can tap into their access of natural gas, convert it into the hydrogen, produce carbon for them that they probably need in their operation, and decarbonize this whole section of their operation.
I know that the final subsidiary we're going to speak about, EVSX, you have also similarly done a lot of R&D, but very frugally. So can you please give us a summary of where EVSX is right now and where it's going?
So EVSX now is at the stage where it's becoming a producing and a revenue generating company. And we have an agreement with Coal to Recycle to receive domestic batteries and commercial batteries, as well as EV batteries. We also are sourcing our own batteries from different other suppliers. But the beauty with Coal to Recycle is that we get a tipping fee to process these batteries and convert them into black mass. Now, the goal from the beginning with that project, as we start the commercial test after installing the commercial line or the industrial line back in June, was to make sure that every single chemistry of batteries that goes into that plant will do more than just break even and actually generate some net income for us. And we realized way back that the EV market's going to take a few years to be mature. And there was also a lot of players with a lot of money, hundreds of millions of dollars being thrown at different problems that are linked or adjacent to that business. And we were coming in with a few $1,000,000 a little bit late to the party. So we looked for alternative. So we looked for niche market. We found them, and we think that this is the way we're going to be profitable with this company. And we've acquired also a lot of knowledge with the commercial operation of that line. There was some production over the summer. Then we realized, okay, for a certain type of chemistry, we need to upgrade that line. We've done that. We multiply the capacity and realize other modules along the different subtle modules of this industrial line will require update also if we don't want to be too often into maintenance and if we want to get the best quality black mass, so that we can also double dip by making money on the black mass on top of the tipping fees. And on top also probably or triple dip, because there's some material that goes straight to the recycler, like copper, brass, aluminum, steel, these kind of things.
Well, Frank, it's been so interesting to hear from you and learn all about St. George Eco Mining and all its subsidiaries. It sounds like there's going to be a lot of news flows from across the organization in the coming months. And it sounds like there is a lot for people to sink their teeth into. So I hope they do come back and watch the rest of our videos as we get our hands into all of these sections.
Perfect. I'll be happy to come back and give you an update.